Okay, let's continue with our next Fireside chat here on day 2 of FinTech Live London 2024. This is Transforming Payments, the era of embedded finance. So let me introduce my guests here today. I'm joined by Jakob Pethick, Chief Commercial Officer at YouLend, and also Henrique Di Lorenzo, VP Products Financial Services at Mollie. A warm welcome for Jakob and Henrique, please. Okay, well, let's do a little bit of scene setting first, because that seems to be the best place to begin with. Henrique, I'll start with you. So Mollie is leader of online payments across Europe at the moment, making big strides, which I'm sure you could speak about at length, but we'll try and stick to the issues if we can. Let's go through some of the innovations, though, that you've seen there at Mollie and how they're helping customers and how particularly embedded finance plays a big part in that.
Good, no, thanks. Hello, everyone. Good afternoon. Great to be here. Indeed, won't talk a lot about Mollie in general, but just to keep very short, Mollie, we started as an online payments provider, and since then we expanded to help customers to accept payments wherever they are selling, like online, offline, via invoices, B2B, B2C, and beyond. And we work especially with small, medium, large customers, anything but enterprise. We don't touch them. Unless they don't want customizations, then it's fine. And within this group of customers we work with, like those merchants, we connect with very talented entrepreneurs who are really concerned and care about growing their business, right? And this is kind of the hook, how we connect this to embedded finance, but also embedded lending. We're going to talk today. It has to do with that group of customers and their needs and their drive to just be growing their business. And the type of problems you see with them, like we ask them, what challenge do you face? And often we hear that, hey, we have a good business, we have great potential, but cash flow or liquidity challenges is preventing us from reaching our full potential, right? And it usually has to do with three types of opportunities or problems. Number one, more often has to do like, hey, stock, supplies. Like I need to buy, like if I have more items on stock, I can sell more, but my cash flow is not matching. For instance, prior to Black Friday, they know they're going to take a big order, but they don't have enough funds on cash to fund that. So they need funding to buy stock. So that's number one. And category number two has to do with, let's say, expansion of the business. They have an opportunity. I was talking I think last week to a customer. They have like a beauty salon, and she said like, hey, we have customers who have potential. They want more. I just don't have space. Like I need to grow my business, and I need more space. I need to invest that. So that's another place where they'd like to invest. Number three is usually like marketing. They have good product. They haven't reached their audience. They haven't reached their prospective customers. So they'd like to that. So these are the typical three areas where we help customers with funding, but also with kind of our embedded financing solutions. Has to do like with stock, marketing, expansion, and if they grow, they will sell more, and we as Mollie will process more payments. So it's kind of like a win-win to everyone. So this is the things I kind of summarize that.
Absolutely, and Jakob, you're coming from a slightly different perspective at YouLend. As we're saying here, this is the era of embedded finance. Let's go through some of the key trends you're seeing from your perspective. I think it is an era of it. It seems to be a key discussion point over the last 2 days. Your perspective?
Of course. First of all, really nice to be here and nice to see you all. So we come at this from a very different perspective. We help companies like Mollie serve their underlying merchants. We see the underlying merchants, whether they're in e-commerce or whether they're pubs, bars, restaurants, struggle to access financing because it's difficult to serve small businesses. They're usually quite risky. And our job is to try and help them access that financing. We do it exclusively in partnerships with companies like Mollie. And what we're really seeing in the embedded financing space is that more and more companies are trying to help their small business customers solve financial problems, whether that's solving payments by integrating it into the applications, like Uber is a good example of a nice form of embedded payments, whether it's helping plumbers pay in 3 installments when they buy their materials online, or whether it's helping e-commerce sellers stock up for Black Friday. We see that there's a lot of technology companies who are really well positioned to help small businesses access financing. They probably have more trust with that small business customer than the bank would have. And YouLend's position in all of this is to help these enterprise companies serve their underlying small business customers. The sorts of trends we've been seeing in the last few years is really just the accelerated adoption of embedded finance. If you go back 10 years, you'd see few companies were trying out offering financing. Amazon were beginning to do a bit of lending to e-commerce sellers. Square was offering working capital loans. I think now we're seeing that it's really become part of the playbook for a lot of large enterprises that offering financing to their small business customers is something they should be doing. We see food delivery companies do it. We see travel companies do it. We see payment e-commerce companies. We also see a lot of less traditionally tech-savvy companies do it. I think a nice example in the US is the company Jobber. They provide software to construction workers. They also need access to financing. So really the biggest trend we see at the moment is just the increased acceleration of embedded financing.
Now, I think if anyone has their FinTech Live bingo card out, not an official product, it would be about the importance of partnerships. I don't think there's been a single presentation on this stage over the last 2 days where someone hasn't talked about partnerships. We have a partnership on stage here. So what I'm fascinated about is how your partnership works, how it comes together, how you get the best from that partnership. I'll throw that open to both of you about how you want to. This isn't the point where you say you hate each other, for the record. How does that partnership
That's question
work?
3? Or?
That's number 3. So how does that partnership work? How do you get the best from it?
Should I go first?
Go first, please.
So one of the things that YouLend, we go to market exclusively through partnerships. So we work with a lot of different partners. I think in the partnership with Mollie, what's worked really well is that Mollie has a very clear idea of what you want to do, extremely focused on the underlying seller, and with a very high bar for what sort of user journey is acceptable. And when we go back a few years to the launch of the partnership, Mollie was really good at challenging us to build something that was better for the underlying customers. I think in general, when I look across the sorts of partnerships we work with companies also outside of Mollie, is really, I think, key to have a high degree of trust and bring a lot of yourself to the conversations. I think at Mollie we found a very good cultural fit, but with a lot of our other partners, we also find that they have a unique perspective that we didn't see ourselves before. They might serve, as I say, a very broad range of small business customers. So, and I think one of the things that really gives me a lot of joy in my work is to be challenged by a lot of our partners to get better at what we do. That's the easy part. I think we can talk about the harder parts later.
Yeah, exactly. So indeed, when selecting a partner, we are a tech company and we are very patient, I think a hard customer or partner, meaning like when we're building products, when looking for partners, we look for players that are, number one, we share the same values, cultural values, right? You need to feel like you have like a talented group of people. But for us, it's very important to have like a tech-first approach, quality APIs, because we really want to embed products, and our engineers are often on the lead on those conversations. So we really assess that, hey, do we have a good product? Do we have a good tech stack? Can we move fast? Like speed for us is very key, to deliver products. So we look at elements like that, shared values, your reputation, the ability to move fast. And if we have a call, like we want to connect responses very quick. Some partner, or actually not partners, players we have engaged but never became a partners, there would be 2 weeks later, like very slow going, they get a response like this is for us absolutely not a goal. But so yeah, the feeling of building something together, being engaged, sharing the same goal, I think that's what helps.
But Henrique, from your perspective and Mollie's perspective, what differentiates this partnership from other FinTech collaborations? How does it maybe align with the wider mission at Mollie?
I think I'd rather think like how this partnership more aligns than differentiates, because when we're looking for partners, we're usually looking for partners that, that's in line with our view of a partnership should be. So we're not looking for something different. We're looking for partners that fall into this category. And as I said, like for us, we really want to create the best product, the best user experience. We don't want to compromise on user experience. We want to create like really good journeys. And for me, this is where our partnership, but also with other partners we have aligned, like it's always about creating the very best user experience and have the tech stack and to allow us to do that. If someone has a solution that, it's just a referral link, you go there, you get to an external website, you get people out of this journey. Like a broken experience, it's something that we really don't accept, and that's what, that's what we believe in.
I was going to get on.
To add a little bit on that, the interesting thing from our perspective is we work with some partners who are like Mollie, exceptionally sophisticated technologically with a very high bar for the user experience. We also work with some companies who have very limited tech resource and just need to go live and want a referral link, just like you say. So I think we find that our partners expect very different things from us depending on how much energy and resource they want to put in. And I think one thing that gives me a lot of joy in the Mollie partnership is the high degree of investment, but I also really like seeing that some of our partners can go live very quickly, get a solution out to small business customers and fund them very fast without necessarily having the same standard. But it does mean that kind of partnerships come in many forms across the ecosystem.
Jakob, one thing that you mentioned a moment ago that I want to pick up on, and that was the use of the word challenging, because it'd be very easy for us to sit here and say how wonderful the relationship is and everything's fantastic. I'm sure there's going to be days when there's been some challenging conversations you've had to have behind closed doors, the grit in the oyster, if you like. Talk me through some of that, because I'm sure those are challenges that many people in this room will have been through at some point or another.
Yeah. I think a very fundamental challenge in our partnership is that whatever YouLend brings to Mollie could be building themselves. A lot of the companies we work with are very strong technologically, financially, and for them it's just a decision, do we build ourselves or do we partner? That means that from day one, there's an open conversation that says, hey, Mollie might one day want to, I'm not saying this by the way is true, but Mollie might one day want to become a bank, have a lot of loans outstanding. They might want to do their own lending product and not partner. And that's a very natural tension that we have in our partnership from day one. I think the way we go about still working together is finding ways where YouLend can add value to Mollie and figuring out where does Mollie just need to build themselves. But that's a sort of open, ongoing discussion. I think another aspect where we kind of have discussions is really around the fact that we're not the only provider of embedded financial services out there. There's a lot of other people who offer embedded financial services, and Mollie could well work with all of them. And I think that's just a natural tension you have in a partnership, right? You're both trying to build something together, but you're also both trying to maintain your businesses and kind of grow in directions that are not always the exact same. I don't know, do you think there are kind of other ones?
I think there are a lot of them. Can I share? Okay, here we go. So indeed, a lot of these conversations are challenging ones, and obviously we appreciate the partnership. But here you go, you're on stage, you're telling this to people, maybe they'll like your pitch, and maybe tomorrow everyone in this room is going to work with YouLend and have embedded finance, and what used to be, for us, a very special, unique product, suddenly everyone has it, and we no longer feel that we have something unique or differentiated. So I think in our conversation, we're very open about that. Hey, we're partners. We obviously want you to grow together. But at the moment that you see, like, hey, our partners are growing, now selling to everyone, and we feel that we are no longer unique, and the product that used to be special for us is not just become common, like a commonplace, right? So the way we deal with that is really discussing about like innovation, putting kind of some pressure, like what is the next thing, what is the next product, can we be the first, listening to our customers, their demands, and trying to build those products for them. So it's really pushing you hard on the speed of innovation and the speed of building new products, and trying to be the first to launch them ahead of your other partners. Because if you're successful, then we are less. Not like
I remember when we launched the partnership, we agreed a kind of credo, which was like, good news travels at whatever pace it travels, bad news has to travel very fast, which was particularly around competitor engagements. And I think sometimes you end up breaking each other's trust, and you just have to rebuild it to be able to keep serving the customers.
You did mention earlier about user experience, and that's been a common thread of the event over the last 2 days. When you're working in a partnership, and elements of both your systems will influence each other's users, how critical is it you maintain the focus on the impact on the users, on the customers, instead of sometimes maybe thinking, well, what are each other doing? How's the partnership working? How do you maintain that focus to make sure the user experience is still great?
So for us, we have a couple of different teams that end up engaging very closely with customers. They're usually customer support or design. And I think really the partnerships where we see we have a high degree of empathy for our customers is just having really good feedback loops with those teams. Because you're right, it is complex to get two financial systems to talk together, and some customers fall between the cracks. You don't think about all the edge cases, and usually the people who pick it up are your customer support teams or your designers who spot it. So for us, it's really about getting a very consistent feedback loop there. with Mollie, we had some good workshops around the user journey when we launched, and particularly the months after, where we've tried to identify what are the user journeys and edge cases we didn't think about that we should have solved for. We also have a lot of partnerships where we're not quite as good at picking up, but I do think it's about having a few feedback channels which are around the customer.
I absolutely agree. I would double on this point. Engage with customer support, because we obviously create beautiful designs. We review the journey, look at Figma, like always the happy flow, right? Nice. But what usually goes wrong, it's less visible in our day-to-day, right? Customers that don't follow criteria, don't have a document, they struggle on the journey and they get out, and customer support, they know that a bit better than others. So it's really thinking now we have the good product, is really think about all these edge cases and make sure that those journeys are also well mapped, that we can automate, that we can provide good experience on those sides. The happy flow on Figma, it's always perfect, but reality, and not always.
For us, like some of the unhappy flows in embedded financing is around where customers get rejected, or customers submit incomplete applications and you need to re-engage with them, or customers don't manage to repay their financing the way you would like to do. Those are some of the kind of classical embedded financing use cases where there can be customer friction or things can go wrong. They're also easy to focus on because you know them from day one. The ones you forget about are usually small customers that like fall out somehow, they miss some information, or they sign the contract but they don't want to take the money anyway. Like all these small edge cases. At YouLend, it's our job to provide a tech stack that makes it easy for our partners to work with it, but we still find that every partnership there's some edge case we didn't really think about.
Well, let's look to the future next. As we're saying, this is the embedded finance era, but there's so much room for growth, there's so much room for innovation. It's poised to play, I think, an even bigger role going further forward, as it's now become the new normal. Henrique, I'll start with you. What's on the horizon in terms for Mollie in terms of shaping that future?
Yeah, the future, it's an interesting, I think it's an interesting question. So if you look today, especially in this FinTech banking space, you see that a lot of players are just getting to each other's space, right? Like Mollie, we're doing payments, now we're doing embedded finance, or players such as Revolut just launched their payments terminal, which is getting in our space. And if you look, all these companies, either direct to consumers or direct to merchants, they're like mapping to each other, right? And the reason this is happening is twice, in my view, it's an opportunity. There's customer demand. If you look, as I said, small, medium business, just in order to manage their finances, they need to engage with a lot of players, right? They need to accept payments, so they go to Mollie online, or sometimes offline payments, they go to someone else. They need to send invoices, someone else. Accounting tool, bookkeeping, payroll, accountables payables, accountables receivables, like every one of those solutions, they would engage with a different player in the ecosystem. And that is just, one is unmanageable, it's a lot of stack, and you don't have time or money to be spending all of that. That's number one. Number two, I think there's a kind of a growing fatigue about subscriptions. Like everyone does want to go into subscriptions and have their packages and their bundles and multiply that by 7. I think there's like a fatigue on that sense. Even for us as consumers, so many subscriptions we have, this is happening also in the business area, right? So I think this combination of demand, this fatigue for subscriptions, and the opportunity just leads us to expand our portfolio and be offering, let's say, more of those services. Like that's let's say, the observation. There's been like an old discussion in the industry about, yeah, you need to choose. You need to be either the best in class, go deep and be really the best on something, or the other paradigm is you need to do all-in-one platform. Like you go broad, you provide all types of service. So it was best in class, all-in-one. But I think now with this embedded financial service, embedded finances, you kind of get in a situation that by working with good players, you can actually do both. You can be best in class, you can do all, and you can start to consolidate your portfolio. And I think this is also what we see ourselves from Mollie, especially because being a payment provider, we are very much in the early part of the chain. Like when the funds get seen, like our customer sells, the money arrives to Mollie. So on the money flow, we're in a very privileged position. So we plan to play like a kind of a leading role in this journey of integrating more services and fighting the subscription fatigue and the need to deal with so many providers just to run your finances, which is becoming unmanageable.
Yes, I remember the days when you actually were allowed to own things rather than having to pay for it every month. Jakob, I'll come to you on that, the future.
Yeah, I think the biggest trend we see is this continued adoption of embedded financing across a lot of verticals that didn't used to do it. So I think it's well understood within payments that it's a value-add service for small business customers to offer financing. I think it's new that we're beginning to see that in the travel space, in the food delivery space, in the EPOS space. The other thing is kind of around the nature of partnerships. So I think you're beginning to see a lot of quite sophisticated partnerships spring up in the around embedded financing. We used to have a quite simple dichotomy, which was like, do you build it yourself or do you partner with somebody for it? What we're seeing is a lot of partnerships that are springing up, which are more kind of blur the boundaries. I'll give you an example. Amazon used to build their own financing product and offer lending. They increasingly partner in some markets, and in some places they do a little bit of both. We work with some companies that initially would like YouLend to provide the full stack of services, take all the credit risk, make sure all the regulatory was serviced, blah, blah, blah. Over time, they would like to take away parts of that value chain and own it themselves. So we see this kind of build-buy dichotomy becomes much more of a continuous space, and we have a lot of partnerships that are sort of not just that simple dichotomy. And then finally, embedded finance is a space that is becoming really popular. There's been a lot of investor money flow into it. I think what we'll see over the coming years is a bit of consolidation of the industry and a bit more increased M&A activity. It's quite hard to grow businesses that operate at this sort of scale, and as you say, Henrique, it's important to have reliability, robustness. I think we'll start to see a little bit more M&A over the coming kind of 3 to 4 years. But otherwise, the underlying demand is basically, as Henrique says, small business customers go to too many places to serve their financial needs, and sometimes they can't even have them met by incumbent providers. And there's a really unique opportunity for a lot of the tech companies, the payment companies that are close to customers, to solve more of their financial service problems. And I think that's what will be driving the continuous adoption of embedded finance.
Yeah, if we just hold that thought for 1 second on SMEs, because that's where I wanted to close. But I'll see if there's any questions from the audience before I get onto that. Yeah, just at the front.
Thanks for the brief overview of the industry. Like you said, a lot of the providers are now entering different spaces, right? And going to overstep on each other. Business banks offering accounting services, for example. What do you think are going to be the key differentiators why a business would pick a certain provider over the other? If it is pricing, better pricing, for example, how could the unit price go down for them? What are some of the things that these payment companies should be thinking of to have that differentiator? What would you list as part of it?
Good question. I think there's two things. Absolutely, I think pricing plays a role. Not the individual pricing, but the total cost of serving, right? And maybe individual price not, but if you today multiply those services by 7 providers, the total cost is high. So I would say the total cost of operating it, that one is important. But I'm a stronger believer that product quality is leading in people who actually like highly functional products that just get the job done, and for that, they're even willing to pay a higher price. For instance, in some of the services we do even together, it's not that we beat banks on pricing, and we are like, it's not like that. And what we notice talking to our customers is that they feel a lot of discontent with their providers, like even their banks. They say like, hey, I'm working with them for 10 years, a decade. They were my number one choice for that product specifically. But I go there, I need to apply, even though I've been operating for 10 years, they know my financial health, they know how well I've performed, they know I'm a growing business, they have all the data to assess that let's say I'm at a good business to collaborate in this one. They feel like they're completely strangers. They need paperwork, multi-week application processes, very bad experience. So they were so happy of working with us, particularly because the product quality, the user experience, the speed that we could access fully automated, providing funding next day, and that's the kind of the feedback we got. So I think, yes, there's the total package, price, cost, but absolutely product quality and experience, I do think is leading in selecting who they're going to rely their finances on.
Maybe one data point from my side, we work with a very wide range of partners, and some of them are very close to their underlying small business customers, and some are further removed. And for us, it makes a huge difference whether they're able to actually also offer embedded financing a good way. Like concretely, we see very different response rates. And I think my observation is that some companies, through a combination of stronger product, high customer service, and having a product with regular interactions, are much closer to their customers. So like simply put, I think it's easier to sell loans to somebody who uses your payment services than it is to sell payment services to somebody who uses your loan, because you don't speak very often when you offer a loan. And I think the sorts of companies that are well positioned to expand and to add more products are the ones who are close to their customers and are used regularly with good product quality and a high degree of customer service. And the companies that are much less well placed are the ones who are far removed from the customer, don't talk to them very regularly.
Thank you. That was an excellent question. And one last one from me is, how critical is it that we don't forget the SME market? Because if you're getting embedded finance from one of the big tech players online, you're buying something, you expect a certain level of service. If you're using embedded finance from a smaller, the one-man band, the SME, the smaller business, how crucial is it the level of technological quality and competence matches that side of things? How important is we don't forget the SMEs in this space?
So I guess from our perspective, most of the SMEs we serve are really smaller, like median number of employees, maybe 3, 4, so very small businesses. I think historically they've been really hard to serve, and I think simply because ticket size is small, unit economics are not very attractive. So the only way to serve them as a business is by having a very good tech stack that automates a lot of your customer interactions and takes away a lot of the friction points. I think from a customer perspective, it's really important to not forget about them either. They're the backbone of the economy. Most people's jobs are in very small businesses, and we often find that when these small businesses receive financing, they grow much faster. I think for every loan we issue, we generate about 1 job, and it's really incredible to see how many jobs you end up creating over a year by supporting merchant growth. So I think both as a provider, we can't forget about the small ones, we need tech for it, but also just for kind of maintaining and serving our mission, we need to service the smaller sellers who are often the ones who are the most capital constrained. I don't know, do you have anything to add?
I agree. Like some people ask, like, hey, how's your product performing? What's the traction? Like I hear a lot about that question, like how do you measure success? And people usually expect to hear back, like how much revenue you're making, how much loans you have issued, but it's not actually how I look at it. It's not how my team asked them to look into it. What I asked them to look today is that, hey, we have issued a product. Can we prove that we're actually helping our merchants, customers, SMEs, grow after they have used that product? And that's not easy, it's straightforward, because revenue or volume, it's a dashboard, it's a number, it's easy. But once you want to prove that your product is actually helping them to grow, you need to look at the data, you need to remove seasonality, you need to compare with peer groups, you need to do a lot of data analysis into regulation to actually prove correlation, to prove that this product has enabled. But this is absolutely what I work with my team and the data analysts is like, can you prove that by using this product, their business is accelerating, which they grow and they process more payments with us? That's our number one focus, is to prove or help them to be more successful in their business. It's not just to look at top line revenue and like, well, you're a commercial person, you like that more than I, but this is how we look into that.
Okay, well that seems a good place for us to wrap up that conversation. Jakob, Henrique, thank you so much for joining us here at FinTech Live London 2024.
Thank you.
Thank you.